Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport, and this is your Dairy Week in Review for January 3rd, 2014. Let's start out by taking a look at where our CME dairy components settled at the conclusion of Friday's trade. Blocks finished up the week at $2.04 1/4, up 4 1/4 cents. Barrels settled the week at $1.92 even, down 3 cents. Butter settled the week at $1.57 even, up 2 cents. February whey finished just under 60 cents, and February non-fat dry milk finished just over $2. Now let's jump over to Class 3 futures, where we saw a particularly strong week again. January finished the week over the $20 mark at $20.06, up 58 cents. February settled the week at $19.68, up 90 cents. March settled at $19.07, up 45 cents on the week, and that now puts our 2014 average at $18.26, up 23 cents from last week. Let's take a look at our weekly block barrel average chart. So as you can see here, this strong uptrend that we've seen for several months now remains intact, and we've actually broken out of the top end of this channel that we've been in for quite some time. Now we did pull back a little bit to start out the week earlier this week, with barrels being offered down 12 cents between Monday and Tuesday sessions, offered down 6 cents each of those days, but they did rebound nicely here during Thursday and Friday, and that allowed the block barrel average again to finish up the week down only 3/8 of a cent. And we are closing in on this longer term level of resistance here, this downtrend line of resistance, which comes in at about 205, which we will likely run into quite a bit of selling pressure up near that level. So now let's jump over to our second month milk contract. So here we have a daily chart of our second month contract, which as of this week has become the February contract. Now as you can see here from the August low, we've rallied over $3.50 over the past few months now. And as you can see here, we did start out the week a little bit weaker, off of finishing on a weaker tone last week as well. So Monday and Tuesday again, with the cash cheese being offered lower, that did put some pressure on Class 3 futures, but we rebounded very nicely after we came back from that New Year's holiday break on Thursday and Friday, and we finished up the week very strongly here with the February contract again posting a 90-cent gain on the week. So again, that puts in another contract high for the February 2014 contract, and we could see some more strength there going forward. Now just jumping into a couple of different fundamentals that have helped to drive the market here. Taking a look at the cash whey price, now this is something that we've touched on quite a few times over the past several weeks, but the cash whey price continues to remain range bound for all of 2013 here. Now as you can see though, we have broken out of this range a few times. We broke out to the downside here, but we popped right back in that range, and then we broke out to the upside for 2 weeks, and then we popped right back to the bottom end of the range where we popped out of the bottom end, and now we are right back in that same range we've been in for about a year now. So this is something that we continue to monitor very closely, because a severe breakout either to the upside or the downside of this range could have big implications on what we see with Class 3 futures. So it's just a matter of time though as to when cash whey will break out of this range. Generally, things do not like to trade range bound in this tight of a range for too long of a period of time. Now taking a look at weekly slaughter numbers. Weekly slaughter for the second last week of 2013 came in at 61,500 head. Now that's down about 800 head from the week prior, and is down quite a bit from where we were at in 2012, as you can see here. Now we've been below 2012 numbers for quite some time now, for the past couple of months. And on a year-to-date basis, 2013 is only tracking 0.7% ahead of 2012. That's a very small year-over-year increase as far as culling goes. So we'll see where we come in next week with our final week of the year. Generally, that does reflect the holiday season, which causes a big drop-off in culling, so we'll see where we settle up the year here, but it looks like we will finish up with less than a 1% increase in slaughter year over year. Taking a look at the week ahead here, it's a pretty quiet week as far as dairy reports go, but we will have our next USDA supply and demand report out on Friday, and this January USDA report does tend to cause a bit of volatility in the grain markets, so tune into next week's video for a recap of that. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thank you for watching and have a great weekend.